This is your October 2016 market update. October was a really poor month for both stocks and bonds alike. Domestically, the S&P was down a little over 1.8%, but that was really the best performing index. Small caps were down over 4. Then you had certain sectors that acted pretty poorly. Real estate in particular was down another 5%. It's down almost 10% since the end of July. So that's kind of getting close to bear market territory, so we're watching that. Then internationally, you had their markets down over 2%. And then bond markets too. Our domestic bond market was down 76 basis points, and you had the international bonds were down about 2.8. So that was a really bad month for international bonds. So all in all, kind of a month to forget for October. But we're positioned well for this, so we'll just kind of see what happens. Moving forward, you have the elections in a few days here, and who knows what's going to happen with that. We'll have to see how the market digests that. And the Fed's going to meet in December, and all the research we're looking at and reading Fed commentary leads us to believe that they're likely to raise rates in December. All the data points are on track, and it's kind of getting to a now or never situation for them since they've been talking about doing this for months and months and keep putting it off. And if they don't do it in December, it's going to be really hard to justify doing it right at the beginning of the new year. So we think if they're going to do it, it's going to be December. And that's probably why you're starting to see the market sell off a little bit. If you'll remember, they raised rates last December, and then we had a really poor January and February. The market might just be starting to get out in front of that a little bit. A lot of the interest-sensitive assets are really starting to sell off. So that's something we're watching, and we'll have to see what happens post-election and have a recap about that at the end of November.